Hello friends, we'll be discussing another illustration which is related to the comprehensive problems of not-for-profit organization. Now, this is the last kind of problem that we'll be having when it comes to not-for-profit organization statements being prepared here. That means income and expenditure statement and the balance sheet here. So we have already mentioned the problem here for your reference. Let's figure out what we have in this specific referential problem. So we have to prepare the income and expenditure account and the balance sheet of Moria Hospital as of 31st of December 2016. The receipts and payment side has been mentioned here. We have the opening balance of cash and bank mentioned, total amounting to 3,000. We have the subscription mentioned here for the year 2015, 16 and 17. 15 being the previous year, 16 being the current year, and 17 being the next year. The amounts have been mentioned there. We have government grants being mentioned here for building and for maintenance. And another one is for fees from sundry patients. Now, there is another option that has been mentioned here, that is donations, whereby clear instructions have been given that not to be capitalized. And again on the receipt part, we have net collections from benefit shows. Now, this is like some specific kind of income that we are getting, or rather some specific source income that we're getting here. Now, on the payment side, we have salaries, out of which the total amount has been mentioned here as 15,600, out of which 3,600 refers to the year 2015. That means previous outstanding. Next one is hospital equipments. We have another item mentioned here as furniture purchase. So this is addition furniture that is purchased here. The next one is addition to the buildings. That means another building has been added, or rather purchased. Printing and stationery and that expenses have been mentioned. Rent and rates have been mentioned, the total amount being 1,000, out of which 150 refers to 2017. That means advance payment has been made. Electricity and water charges have been mentioned here. We have office expenses also mentioned, and the last one is the investments that has been done. Now we have the closing balances of cash and bank as well, total amounting to 4,100. Now this is only the receipts and payments that we have figured out. We have additional adjustments also. Let's figure out what are the additional adjustments that are here. So it is stated that the value of building construction as of 31st of December 2016 is 70,000. That means the building that is under construction, the value of that, the closing value of that building is 70,000 as of 31st of December 2016. Value of hospital equipment is 25,500. Building fund as of 1st of January 2016, that means the opening building fund here is 40,000, which has been mentioned. Subscription in arrears as of 31st of December 2015 has been mentioned as 3250. Additional information states that investment at the rate of 8% in government securities was made on 1st of July 2016. Now we have to go ahead and prepare the income and expenditure statement as well as the balance sheet here. So before we could start with the income and expenditure statement and the closing balance sheet, let's start with some working notes here. Now, the working note that is prepared, or rather the working note that we're preparing here right now, refers to the opening balance sheet to figure out what is the capital fund that we have, and that will be transferred to the closing balance sheet. So let's figure out what is the capital funding that we have. So this is the balance sheet that we're going to prepare as of 31st of December 2015. That means the closing balance sheet of previous year is what we're going to prepare here. So let's start with the asset side first. Now, the first item that we have mentioned here is the buildings. Now the opening building, or rather for year 2015, how is the value 45,000 derived is what we are going to explain you. In the adjustment it was mentioned that valuation of the building as of 31st of December 2016 is 70,000 rupees. That means for current year the value of the building is 70,000, in which there is addition of 25,000 which was already included as mentioned in the payments, because in the payments we have mentioned that there is an addition of 25,000. So out of 25,000, or rather out of 70,000, which is the closing value of the building as of current year, if you minus 25,000, that gives you 45,000 here. So that will be the value of the building, or rather the opening value for this current year and the closing value of the previous year, because closing value of previous year will be the opening value of this year itself. So the building value is 45,000. Similarly, we have to check all those adjustments and figure out what is the previous item, or rather previous assets that can be considered out of the payments item. Similarly, for equipment, we have the value given as of 31st of December 2016 being 25,500. That is the closing value of current year's equipment. Out of which we have made another purchase, or rather out of the 25,000, 8,500 refers to the purchase that we have made in the current year. That means out of 25,500, if you subtract 8,500, you will get the balance as 17,000, which is the opening value of the equipments, and that will be the previous year's closing. Now, the next adjustment that we can refer here is the subscription receivable, because an outstanding subscription, or rather we can talk about the subscription earned but yet not received, is an asset for us. So that was mentioned in the adjustment as 3250. So that can be mentioned here. So this has been mentioned. Now, other items that can be mentioned here out of the receipts and payments, because adjustment has been already cleared for the asset side. Other items that can be mentioned here is the cash and bank balance. Now, which cash and bank balance will be mentioned here? You're correct. The opening cash and bank balance. In the receipts and payments, when you had the opening cash and bank balance amounting to 3,000 in total, that will be mentioned here. Now, once the asset side is completed, we'll go on the liability side and figure out what do we have there to mention. Now, in the adjustment, they have mentioned building fund as of 1st of January 2016. That means 1st of January building fund is equivalent to the 31st of December 2015 itself. So that will be mentioned here. So that has been mentioned. Now, if you see in the receipts and payment, what is the liability that can be referred to 2015, only for 2015? That's right. That will be salary, that is 3,600 for 2015. That was payable and it was received in the year 2016, whereby that's the reason it has been mentioned that out of that whole salary which has been received or paid, 3,600 refers to 2015, which was outstanding and paid off in 2016. So when it comes to balance sheet of 2015, it will be still a liability because it was not paid in 2015. So that will be salary payable. So with this, for 2015, opening balance sheet has been already done. We'll figure out what is the balancing figure here. We can clearly see from the numericals that there is a capital fund and that will be on the liability side. So we'll just highlight that. So the balancing figure has been figured out here, or rather the capital fund has been figured out here. Now, This capital fund will be utilized in preparation of the current year's balance sheet, and surplus or deficit will be either added or subtracted from this. Now, let's prepare the other workings that are required here, like the value of building and etc. So we have mentioned how we have figured out the value of building and value of equipment. Similarly, we have mentioned the working note and working note 2 denominations, or rather notifications, or a certain bookmark we have done here. So do you understand how that 17,000 value and how that 45,000 value for building and equipments have been derived? Now, the next working will be about subscription. So when it comes to 2015 subscription, the receivable amount was, that means the subscription receivable, or rather that was supposed to be received in the year 2015 as mentioned in the balance sheet as well. That refers to 3250. But ideally, what was received for 2015 was 2550 itself. That means whatever we have received for the year 2015 as mentioned in the receipts and payments column. So there we have mentioned that for 2015 we have received only 2550. So 700 is still receivable for the year 2015. So with this calculation, now we'll go ahead and prepare the income and expenditure account first, and after that we'll go ahead with the balance sheet items. So we have the income and expenditure account for 31st of December 2016. Now we'll start with the income part first. So in this income and expenditure account, all the incomes that are supposed to be received, or rather received only for the year 2016, will be mentioned here. So the first income that we have received is the subscription. So the first income that we have mentioned here is subscription 12,250, which was for 2016. Now the next income is government, or rather government grants. Both is for building and for maintenance. But for building, if it is there, we already have a specific fund. That means building fund is already there, so it will be moved there itself. For maintenance, we have no other specific fund, and hence as there is no other specific fund, we'll move this into income and expenditure criteria. Now, the next income out of the receipt and payment, we can mention that the fees from sundry patients. From receipts column, the next item that we can mention is the donation. As it was mentioned that it is not supposed to be capitalized. That means it is not supposed to move the balance sheet. We're supposed to move it into the income and expenditure account. Now that we're talking about the income part, or rather the income part of income and expenditure, we have mentioned the donation. Let's mention the second last part of it, that is the benefits, or rather the collection, net collection from benefit trade. Now, the next phase of income that you have to mention here is the hidden income basically. So if you see the last adjustment that was given to us, that is 8% interest is supposed to be provided on the investments. Now, if you see for the current year, we have made an investment of 10,000. So that was in the payments that were reflecting. So 10,000 has been done as an investment. From 1st of July, you have to take. So July, August, September, October, November, and December. For 6 months, you have to calculate at the rate of 8% on 10,000. How much will it be? That will be 400 rupees. So now this is the hidden income that you have to mention here. So with this, we have completed the income side. Now let's go on to the expenditure side. Now the first expense that we'll be mentioning is salaries. Now the salaries will be the net amount of salary paid only for 2016. if we can see 15,600 refers to the total salary paid out of which 3,600 refers to the previous years. So 3,600 will be subtracted here. So that gives you a total of 12,000 salary here. Now let's mention the next expense. Now, as we are preparing income and expenditure account, only revenue expenses are supposed to be taken into consideration. No capital expenses. Like if you have purchased building, not to be mentioned. If you have purchased hospital equipments, not to be mentioned, etc. like that. So electricity bill is there. Yes, we can mention that. So the next expense will be the diet expense, which has been mentioned on the original price, that is 7,800, as there is no adjustment related to it. So now the next expense we'll be mentioning is to rent and rates. The total amount paid in 2016 refers to 1,000, out of which 150 was a prepaid expense for 2017. So that will be deducted. That gives you a total of 850 paid for the current year. And that advance that has been paid will be prepaid expense that will be shown in the balance sheet there. So the next expense is the printing and stationery expense. 1,200 rupees has been mentioned. That means that is one specific amount that we have mentioned here at the same rate, as there is no adjustment. Let's go on to the next part. Now there are only two expenses remaining here to be mentioned, which are revenue nature. One is electricity and the next is office expenses. So we'll mention that as there is no adjustment related to it. So with this, the income and expenditure account is cleared. We need to figure out whether there is surplus or deficit. So let's take out the interim balance first. The debit side, that is the expenditure side, shows around 24,050 rupees as the interim balance. Let's figure out what do we have on the income side now. On the income side, we have 32,050 as the amount that has been mentioned, or rather the interim balance. That means that's a clear indication there is a surplus here. Now, this surplus will be added to the balance sheet along with the capital fund that we have already derived, or rather in the working balance sheet that we have already derived the capital fund, in that this amount will be added. So now we'll be preparing the balance sheet here. So let's mention the capital fund first, in which we have to add the surplus. That gives you a total of 32,650. Now, the next item we can mention on the liability part is the building fund. Remember, there was additional expense that was done, or rather receipt that was done on the part of building, or government grants that were given here. Rest, that will be added. So the government grant for building will be added to the building fund here. Building fund, the opening balance is already at 40,000, which has been mentioned. Add government grants to it. Now, the next item that we're supposed to receive here in this specific sheet or liability here is basically the subscription amount. Now, here we are talking about the income received in advance. So, income received in advance is a liability for us. So, we'll be receiving that amount is 1,200 rupees for the year 2017. So, that will be mentioned here. So, with this, we have completed the liability side. Now, let's go on to the asset side. We have basic few assets like building, hospital equipments, etc., like furnitures that was purchased, etc., that will be placed here. Now for building, we already know that 45,000 was the opening balance. We added another 25,000 to it, so the closing value is 70,000 here. Again, for valuation of hospital equipment, they were already mentioned 25,500, so we'll mention that amount. Now, next asset that was purchased was furniture here. So that will be also mentioned. That is furniture purchase that was mentioned in the payments column for 3,000. That will be mentioned here. It's an asset for us. The next will be the 8% investment that we have done at the rate of 10,000 plus 400 of interest that is supposed to be taken here. Along with that, we have accrued interest as well. Now we'll mention the other items. So the calculation that we did for subscription, that means for 2015, 3250 was supposed to be received. We only received 2550. That means outstanding is still there. That means subscription receivable is 700 rupees, which is still there, which is again an asset for us. So we have to mention it here. Again, now that we have mentioned all the entries here, again we have to check into the expenses and income columns. We find rent and rates, for which 2017 we have already paid out 150 rupees. That's a prepaid expense. It's an asset for us, hence it has to be mentioned here. Once this is done, we have to mention the closing balance of cash and bank. So with this, we have mentioned all the items related to the balance sheet for the year 2016. Now we have to figure out whether the liability column equalizes to the asset. That means the liability tally is equal to the asset or not. If it is equal, then the sum is correct. If it is not, that means there is some error in the problem. So the liability side total comes to 113,850. That means 1,13,850 is the liability side total. Let's figure out what do we have for the asset side. Is the same total. That means the sum is absolutely correct, and here we mark the closure of this specific illustration. So I hope with all these illustrations you are able to gauge how to prepare the income and expenditure statement and how to prepare the balance sheet when it comes to financial statements of not-for-profit organization. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.